Good morning, everybody. Hello, welcome, and thank you. So, first things first, I do just want to apologize to everybody that it's been a while since our last video. Long story short, I came down with COVID, and it was not kind to me in the least bit. I actually haven't done much training at all in the last 2 weeks. And on top of that, I am suffering from some long COVID symptoms. So I'm going to be trying very hard today to not cough my brains out right into the microphone. Um, this is the most talking that I've done in a while, so I'm assuming, excuse me, I'm assuming it is going to exacerbate some of the symptoms. But we're going to do our best. Going to try to get through it without being absolutely annoying. And yeah, we're gonna get back to it. Before we get started, though, as always, please, if you like the content, like, subscribe, leave me a comment. Feel free to join our Discord. We love having new faces around, and even when my voice isn't working, I am still typing and sending messages through Discord. So, yeah, that's also a really good place for you to keep in touch and find out what's happening if I disappear for 2 weeks without seemingly any notice. So, yeah. Oh, what have we missed the last 2 weeks? Man, well, the market's been on an absolute tear. We've broken some of our I guess what we could call them is some of our very significant levels. We're above the 200 weekly. We're currently fighting out and around the fifth 20 moving average. Yep, the 20 moving average on the weekly. And it's syncing up with where our 50% retracement level is from our last swing high. On top of that, we have the FOMC meeting coming up in which it's anticipated that there's not going to be dovish language. They're going to be continuing their hawkish approach. So we're at a very interesting spot, right? This is the perfect peak for a really big sell-off, but it's also a good spot for a staging ground of a next rally in which we have even more buyers resume and enter. Some of the other interesting things to note, what we've seen recently, is a lot of the big boys, the big players, have absolutely gotten beaten, especially with earnings that has just come out recently. A lot of them missed their marks, guidance wasn't too great, and we've seen a lot of money flood out of the big names, such as Google, Amazon, and excuse me, Meta. Some of those big names there. So if money's flowing out of those and they make up a huge chunk of the indices, why is price action going up? Well, price goes up as money enters the market, price goes down as money leaves the market. So this tells us that while money is leaving those companies, it isn't actually leaving the market. So this is a good indicator that a lot of money's actually entered in recently. Now, this could be people reshuffling their portfolios, getting a lot of their money out of those big growth companies, and kind of gearing up for a recession and getting their money into more protected assets, companies that are a little less growth oriented and a little bit more dividend focused. So that's something that we could be seeing. We could also be seeing big money moving in position to short this peak. Only time's going to tell, really. All right, so there's our bell. We are getting into it now. We're going to be paying close attention to this overnight low right where we're opening because it is at a good spot with our previous day profile to be the start of a new auction upwards, the end of a down auction, whichever way you want to look at that, or it could be the start of a new downward auction on the day. So this is going to be an important spot for us to watch. On some of our larger time frames, we're going to be looking to see if we've got some demand zones below us that we can play long off of and some supply zones above us that we can play short off of. But we'll analyze those as we come to it. For now, we're just we're waiting out this chop. We are opening in range in value. We are hugging that overnight low right at a thin spot in Friday's profile. So let's see what happens here. I may not be playing as aggressively today, just because I have been out of the markets mostly for the last 2 weeks. So, don't want to do anything silly or try to pretend like I've got my finger on the pulse as good as it was. We're gonna take our time. We're gonna ease back into it. Make sure we're fully up to snuff before we start really jumping into positions here. But that should give us some time to analyze the activity, what's going on, and see if we can start to build a narrative as we approach FOMC. Got a lot of volume opening in this small range. But so far, price has not been accepted below the overnight low. So far. Of course, looking at our ES, we are about to break a low point, so this could be a good short opportunity. At least from the risk reward standpoint, we're sitting on a pretty good short opportunity. Of course, I don't have any contracts loaded up, so I'm not even ready to play a potential position. But this looks like it's it right here on our shorter time. It's testing to see if we are going to get that acceptance below the overnight low. Seeing quite a bit of effort going into some selling here on our Weiss waves. Of course, this is still early in the morning, so that information isn't going to be as relevant until we've got some more to pit it against. And the only thing I wouldn't like about going short here, at least looking at our ES, is I can't really see where our take profit spot would be if I was to short this. So we'd kind of be going in blind a little bit. I haven't really charted it out enough to have good levels with that. For those of you wondering and or curious, my ES chart is set to 15 minutes. I do trade the SPY, but as you know, that is a leveraged ETF that follows the ES. Or if you didn't know that, now you know. So it looks like our price action push below did not get accepted. So something new I'm trying out, guys. We're going to chart this out today for you. We're going to be looking at a method in identifying areas where the market could have a good demand push and a good supply push. So that little, well, I guess it doesn't quite look like a rectangle on the screen you're watching, but no, it does. That rectangle right there represents an area where a lot of buy orders entered the market all at once on our 512 tick chart. So the theory of marking off zones like this is that on a retest of that spot, there should still be some large orders that didn't get filled as everything moved too quickly. So the idea is that's a potential supply demand zone that we could be looking to grab a long into. Just another way to analyze price action and see what's going on, potentially giving us an edge for the placement of our trades. Of course, we are a Wyckoff trader, so traditionally we are looking for support, resistance, channels, apexes, and exhausted price action and explosive price action. But supply and demand zones do fit in pretty well with all of that, as well as market profile. And of course, you guys who have been following me for a while, I like to focus more on tools that read price action as opposed to indicators that tell me what has already happened in the market. Because the idea is, of course, we're trying to peel back the layers, and we're trying to get more of a lens on the auction itself so we can make better predictions on what has the higher probability of being the end goal for the big boys. So remember, we can't actually move the markets. We're just trying to ride the waves that the whales create. Yeah, all this talking definitely is doing wonders for my cough. It is a lot better today, though, than it has been recently. So that's a victory. Can't get too upset there. All right, here's another big explosive order. So we potentially got another demand zone entering in. I'm going to make some slight modifications on my main viewing chart. So now it'll look more like what you guys are seeing. There we go. All right, so it would seem that price action was absolutely not accepted below our overnight low. Can see that we had a rather aggressive push up once we hit that. We had the break above VWAP, a little bit of consolidation there, and then another attempt or an attempt at a move up from there. So two potential basing points now for demand. We've got below VWAP, just below the overnight low, and then we've got right at VWAP. So on a subsequent VWAP test, we'll probably be looking to actually take a long position because we'll know that if it breaks with authority, that we should get out of the way, and then we'll be looking for a retest of VWAP to short. So we just added in another little demand zone there. Because again, we've had some explosive movement upward from a small area of consolidation. This one's not, oh, wow. This one's not going to be as important to us because there wasn't as much consolidation there before everything moved. But the one below it, definitely. That red candle's kind of interesting there. I'm not sure if that was a mistake in order input, because sometimes you can get really ridiculous wicks like that on candles, and it was actually a market maker who made a mistake when they put in information, but sometimes not. So, not really sure how we're going to read that yet. Oh, look at that. We did just get a wick down to the bottom of our potential demand zone, little touch off of our 13 moving average. If buyers are firmly in control, that would have been a good spot for our long. Still way too early for us to assess who's actually in control this morning, though. Range is kind of muted. We're still well within value of Friday. All right, so this little zone that we marked off has now become invalidated. However, if we're going to assume that that wild candle has true significance, it actually gives us a pretty good supply zone to mark off. Oh, so you see we got a little wick touchdown there from that area that we marked off as a potential demand zone. We are getting that retest of VWAP. I'm not going to grab along here just because of how aggressively that moved down to VWAP. I'm going to wait this out just because if it breaks it, then that's bad if we try to get in long. Of course, if we were moving really quickly, it looks like we would have had an awesome scalp bounce play off of our VWAP, off of that demand zone. The volatility alone, that would have been pretty freaking sweet. But like I said, we've been out for about 2 weeks, so quick plays like that probably aren't something you're going to see me make today. But this can kind of illustrate for you how these supply and demand zones work. Like I said, I mean, we got the VWAP, right? So we were already talking about how that was a potential long entry because we had already broken through it with authority, had some consolidation above it. And then the pushback down that we got, you can see that that wick came just to where we marked off our demand zone. And yeah, had we set up an order to buy there, I mean, even if this was just a quick scalp play, you can very easily see that we could have taken some nice points off that. This is pretty choppy right now. I'm glad that we're not in it. Because again, like I said, sitting out for 2 weeks, I'm not really prepared to play quick. And this is the type of market activity that demands quick scalping, unless you've got a really good position and you're confident as all heck. There's another test of that demand zone, another little push back up, but we are getting some breaking of that VWAP, so it'll be a tough call. Of course, price action has not closed a candle below VWAP, so that's good for buyers. Well, I probably should load up some contracts just in case I do decide to play this spot. Let's see. All right, given where our price action is, ho hum diddly dum. Probably be looking to play 387s short and 386 long, I guess. And that puts us at 1 in the money. So if we do lose this demand zone, we will be looking at this lower one. Man, it's fighting though. So this right here, I can explain this a little bit further. So we said, right, that this was our demand zone and we treated it as a demand zone because we assumed that there were going to be other buy orders that were stuck in this spot that got left behind from that explosive candle, right? You can't see my crosshair, but that the candle that exploded up off the VWAP. Now, every time we've come down and touched that zone, you can see that we've had immediate pushback up. So those are those buy orders that we were talking about that were stuck there getting filled. So the big question now becomes, is the amount of selling pressure building from where we had our drop up where we marked off our supply zone greater than, equal to, or less than the amount of pressure that is being exerted by this demand zone that we've marked off? So eventually, through this consolidation between the two, one of these zones is going to give. Hello, good morning. Thanks for joining me. Let me get the chat window up here so that I can see anything you might be saying. All right, good. Chat window's open now. Man, look at that. It's just this push and pull between those two zones. Wild. totally forgot about that. What did you totally forget about? Oh, the chat channel. Gotcha. All right. So it looks like our demand zone. Oh, maybe I spoke too soon. But it does look like our demand zone has finally been depleted. And once the last of the buy orders that was stuck in that zone has been fulfilled, if there is still selling pressure, we should move down to the next zone. In it to win it. Love it. Fan freaking tastic. Yeah, so we have now overcome this zone, and it goes boop, bye-bye. All right, so we've got that sell pressure pushing us into that next demand zone. Now you can see, right, we got that instant pushback. So that tells us that orders were definitely still trapped down there, and they just got filled. So we're going to run into a similar situation to what we were just seeing. Is the selling pressure going to overwhelm the number of orders that are trapped there, or are we going to see more buyers start to pile in and thus send us back up towards that supply zone that we created? We can see from our Weiss waves that sellers are definitely exerting quite a bit of pressure. So, for what it's worth, that leads me to believe that this demand zone is not going to hold. So, we potentially have the same short opportunity that we were talking about earlier this morning when we first tested below. Now, of course, with this authoritative break of VWAP, our best short opportunity is going to be a retest of the VWAP. And by best, I mean our best risk to reward location will be a retest of the VWAP. So, as we can see, this zone has now been depleted, so it is also no longer in play. Which means currently all we have is our supply zone above us. We'll see if a new demand zone is created, but we're just going to be waiting. So at the moment, it doesn't look like there really is anything below us to hold us. Okay, that's not entirely true. So I'm looking at my 30-minute chart. It does look like there is a demand zone we can draw from Friday. So I am going to figure out the parameters on that, and I'm going to go ahead and draw that in on the chart for today. So it looks like 385.82. Right about there. And the bottom of it, oh, of course I didn't give myself enough room. Bottom of it goes to about right there. Okay. So you're not going to be able to see that zone on your screen just because we haven't gotten low enough yet. But I will go ahead and tell you what the parameters of that zone are. Give me a second. Just adding it to one of my charts. All right, so the very top of it, oh, actually looks like you are about to be able to see it. So that's the zone from Friday. We're going to see if this one holds now. But it looks like we've still got a ton of selling pressure being put in. This one is a little bit wider because this is on our 30-minute chart. So we're not going to discredit this one until price action moves all the way through it. But we're also not just going to arbitrarily grab a long position here either. Bottom price of that demand zone is 384.81. So that's the level that if price action breaks below, we won't be considering this a valid zone anymore, which also happens to be just below our previous day value low and just above our halfback. Sorry about that. But for all intents and purposes, price does seem to be accepting below our overnight low. So there's that. Potential short at our 13 moving average. It is a thin area in our profile where we dropped rather abruptly. Of course, judging by the size of the ignition candle that started that, it might not touch the 13. And of course, if it does move that quickly up into it, well, then we'd probably be looking at the actual VWAP test. So far, there seems to be a little bit of demand in this zone. Either that or a lack of interest in selling. See if it gets renewed if we touch the 13 here. So decent risk to reward short here off the 13. No, we say decent risk to reward because if price action breaks up above it, we get out. Doesn't necessarily mean that that's your best short spot. It's just simply one potential spot out of a couple. I did say earlier that the short we would be looking for after the break of VWAP would be the retest of VWAP. So, yeah, like I said, while it was a good risk to reward entry location, you'd already be knocked out of that and you'd be playing from behind. So, just because something looks good on paper, we always have to consider the broader picture. You know, what's going on, right? Again, we don't want to just arbitrarily jump into positions. And while we do seem to have a downtrend forming, um, it's not super strong. It's not super strong enough to the point where I wouldn't expect this to move through the EMA cloud once before kind of continuing on its merry way. So if we were going to talk probabilities, probably say while that was a good risk to reward spot, it was probably about a 40% chance of being the short for what we're currently looking at. Unfortunately, guys, I need to step away for a few minutes. I got to go take some medication. I will be back. Enjoy the charts as they just kind of move. All right, be right back. All right, and we're back. Let's see, what did we miss? So it looks like we did have an initial breakdown after moving up through the 13. So yeah, I guess that would have been a decent short. Got some points off that. Um, looks like it tested about halfway through the zone. Then we had a pretty nice big push back up. Cool. And now we're testing our 48. I'm still waiting for that VWAP test before I decide to go in on a short position. So another thing to consider for today, there may not be a lot of opportunities and the market may not move much beyond this kind of muted range that we're seeing. Remember, FOMC starts tomorrow. And if history is an indicator of things that we should at least anticipate, a lot of times the day before FOMC, the market really doesn't move much at all. It gets pretty stagnant. So if that's the case, then we're going to be looking for some balance plays. At the very least, we should be able to take some shorts and longs from the extremes back towards wherever the point of control kind of starts developing for today. Yeah, it's funny. Trend days have traditionally been the days that have been well, account blowups for me, or just like really bad days. I think what ends up happening is it's almost like this mentality, right? Like you get used to seeing these consolidation zones that you just don't want to believe it when something finally starts moving and the auction begins in either a new direction or a reverse direction. And as soon as you break that extreme, you're like, oh, okay, so now here's where it's going to balance out and it's going to move back towards, volume, not realizing or realizing too late, or, counter to what the argument in your head says. You watch the trend form and you watch the market move, and there's nothing that should tell you otherwise, but you're just so convinced that it's going to balance itself out. So yeah, always good to pay attention to those and know what your markers are for whether a day is trending or whether a day is balancing. Generally speaking, if you get a lot of activity kind of swishing back and forth across VWAP, that's a two-sided trading day. If you set an extreme in the morning for both high and low, and then you find yourself maybe only on one side of VWAP, but never really extending too far beyond the extreme that you've created, you still have a two-sided trading day. It's just more favoring whichever side of VWAP the activity is staying to. And then, of course, you have your trends where you're making higher highs, lower lows, or lower highs, higher lows, depending on which direction you're heading. I think we could mark that as a supply zone. It's not super convincing, but I'm going to try it. And then we're also going to mark a demand zone within this demand zone. So it is important when you're looking at supply and demand zones to make sure that you're not just looking at them on one time frame. I mean, they're great on the larger time frames to give you an idea of where the extreme ranges on the day could be. But if you're trading on the shorter time frame, it's probably more beneficial to you to mark them up as you see them form for your shorter time frame. So, for example, on our 30-minute chart and our 4-hour chart, we've got some zones that are a little bit bigger, a little bit further away. So those tell us areas where there's potentially large orders trapped from previous days still, where we could find, the market could find support or it could find demand. Support or it could find resistance. No, supply and demand. Supply and demand is different from support and resistance. Got to remember that. Don't confuse the two. Think of it this way. A support zone is an area that entices buyers to enter the market, whereas a demand zone is where there are previously trapped orders that become executed because they're still in the market queue. So in looking at our 30-minute chart and just kind of seeing where price action's heading to, it's testing lower and lower and lower in this demand zone. But we do see that there are absolutely orders that are executing. And that's why each low that it's made, has been followed by these big ignitions. So using that information, now we can start to apply some Wyckoff theory, right? Which tells us that we've potentially got a shortening of the thrust here going on, and we could be looking at the reversal. So let's go ahead and mark this off on our chart. So we've got our channel to look at. So you can kind of see how this channel interacts with this demand zone now, right? And you can see that as it's tried to make its way lower into this demand zone, we are starting to see a shortening of the thrust. Obviously, it's not a change in direction until we end up breaking the channel, but we can start to assess where the risk to reward is. So again, if we're looking at a balance day, right, then we've probably got a pretty decent odds on opening a long position somewhere in this demand zone, especially if we keep seeing this shortening of the thrust. There we go. That's the word we're looking for. Which gives us an opportunity to potentially ride the break before it even happens. And then, of course, if we're entered in down here, we're in a great position for that VWAP test that could initially find resistance, even if we are, in fact, changing direction. So it is still early in the day. Sellers have been showing a little bit of dominance in the activity so far. We're sitting at like a 58% sell volume on the day. On our 5-minute chart, we've got favor for the buyers, but 15-minute chart, favor for the sellers. Yeah, looks like we're going to test our 48, and we're going to test the top of our channel. So above that, we've got our VWAP. We've got this potential supply zone, smallish supply zone, just under VWAP. So if we do get the channel break and fail, then we probably got a pretty good short play coming up here. If we get the channel break and the move through VWAP, then we should be looking for a long play up towards our initial supply zone. So another thing that I want to just kind of point some attention to, look at how our currently developing profile meshes up with Friday's profile. We've got some thinning of these lows at the exact same spot where we had thinning in our profile from Friday. So that kind of shows us that it's the end boundaries of a downward auction. So there's another little plus for you for saying that that was a good spot to get long. All right, we're hitting that potential demand zone. Got VWAP just up overhead, breaking the channel, breaking our 48. Potential crossover event happening for our moving averages after that. Got the initial pushback from that demand zone. So the more we see all this, the more arguments that are actually starting to favor longs. Obviously, our risk to reward is not great up here. You can see that the better entry point would have been on the third shortening of the thrust. So at this point, I mean, you could take life into your own hands, and you could just assume the long position, or you could wait to see if we do get one more test low. Maybe it comes back to the crossover point before it tries to make that full VWAP break. So we'll see if we get a VWAP fail here, then potentially we will have another good spot to enter long. If we end up breaking just straight up through VWAP with authority, well, then we're not going to have a very good location for potentially getting in long until everything settles itself out. But that absolves that demand zone. All right. So at this point now, we would be looking Well, we'd actually be looking for a retest of our VWAP for long. So this is what we call an authoritative break, meaning there wasn't any waffling here, right? It pierced, consolidated for a second, absorbed some orders that were stuck there. That's where our demand zone was from the previous candle, and that's where supply zone, and that's where demand just absolutely overran the supply that was available there. So now it's moving up to our next supply zone for a good little test, which also means this channel is now no longer valid. So unfortunately, we did identify that long trade just a little too late. We probably could have talked ourselves into entering as the moving averages were starting to cross over. At least there, we would have had a good risk to reward location. And we had already identified that there were more favors to the buyers than sellers. So, hindsight. So at this point now, we're going to be looking for the potential short opportunity back towards VWAP. Of course, if it does come down to test VWAP, where we now have a demand zone, that's also potentially our long entry for a test of the supply zone up over our heads. We're still in balance theory, as we have had a flip-flop back and forth over our VWAP as we get into our C period coming up. So for all intents and purposes, we seem to be in a balanced day. Going to move our lower target since we already hit that. Still got the same contracts loaded up. 386 on the call side, 387s on the put side. Given our range that we're playing with, those are going to be our contracts that'll pay us. You want to be very, very careful playing out of the money, especially on days that have a narrow range and balance. Because remember, if it's out of the money, there is no intrinsic value when you buy it. You are strictly buying theta. If it's in the money, yes, you're buying some theta, but most of what you're buying is actually intrinsic value. That's it's funny right there. Hilarious. When Lambo. All right, getting a little pullback, a little test of our 13. All right, here we go. VWAP test. All right, pushed right through that bit of demand, right through VWAP. So that's a pretty strong break there. We have a new supply zone. Could potentially. Oh, I was in the wrong spot. We're going to adjust a couple of these zones, y'all. Oh. Interesting. May have missed a long entry there while I was futzing around with some zones. Getting some consolidation here. I don't know why, but for some reason I want to enter long here. I don't know if I'm gonna. I'm trying to figure out why my gut is saying it, seeing if my brain can catch up. I mean, entering long on a crossback, that's aggressive. I think my gut may be too soon. No. Is it crossing? It looks like it's struggling. It's the 15-minute ES is what I'm watching, and it's this 3880.29 level. All right, it just lost that level, so. So it was definitely potentially too soon. But here's a potential demand zone that we don't seem to be bouncing off in the slightest bit. Nope. Full on Pierce. See if we've got an apex forming here, huh? Might have something for a little bit later in the day. Apparently I missed the high on that. That's definitely not where I dropped that point. That's where we dropped the point. So if we were starting to see an apex forming, where I've drawn the line is kind of where I would anticipate that it would find its bottom. So if we do get a bounce touch off that point, that's potentially our long to play back up to VWAP. Of course, this is just speculative TA. This is more me saying, okay, if it touches, we get a perfect touch there, well, that lines up with a couple things that would give us some good strong indicators. Interesting. So the lows there are holding at the top of some of those ignition candles from that bottom zone. Oh, C period. So let's see if we get a nice proper low off B. I think we missed it. I was trying to get in long there. I was seeing a price that I liked for our risk to reward, but it just started moving a little bit too quickly before I pulled the trigger. Man, that's unfortunate. So we don't want to just hop in now because of FOMO, but be interesting to see if we were right about that entry. Maybe we'll get another opportunity to enter at that good spot. Ooh, maybe even a better spot. All right. Can we get in? All right. We're in. So, if we're right, that did touch the pretty much the perfect spot that we wanted. We are going to go ahead and defend this now that we've got some profit. I mean, if we get booted out, whatever. We'll take a couple cents on it. Dang it. I think I just got booted out for nothing. It's just finding that consolidation point. I shouldn't have protected it so quickly. I should have given that the breathing room. I mean, that was like a 5-cent risk for potentially really big reward. Like we're talking 50-cent reward just to VWAP. So, whatever. I'm getting back in the saddle. I can't be too hard on myself. The important thing is we didn't take a loss. But I'm feeling fairly confident that I did not want to get booted out of that position. Got about 25 minutes left before we got to shut it down. We're not going to force any trades. We'll see if another opportunity presents itself, kind of the way that one just did, that we unfortunately booted ourselves out of. But that's the way the cookie crumbles. If nothing else, we did get some pretty good information in this video today. So, maybe you didn't see some baller trades, but I did drop some pretty awesome knowledge bombs for you guys to absorb and hopefully take into your trading and do better. At the end of the day, that's the goal. Don't really care if you get to see me trade well or poorly, as long as you get something out of it that helps you be a better trader. All right, so price did just come back down to where we entered. Let's see what happens here. I might jump back in. All right, we've got some poor structure on our AC periods. We've still got a proper low on B, but the structure is seemingly telling us that C period wants to poke a little bit lower, if not lower than B period. So interestingly enough, it ends up being a good thing we got kicked out with the profit that we had, because this would have turned into a loser that we would have taken a full loss on, because, I mean, it just touched the bottom of that zone right there. Wow. But maybe we wanted to enter at the bottom of the zone there. Holy crapola. So I guess we're going to go ahead and say that that's still a pretty strong demand level. We still have a proper low. If it does tick lower than the low we just made, then it becomes poor. Looks like our original trend line's holding a little bit there. You know what? Maybe not. Oh, okay, it did fill us. So, not the best entry point, but it is within our risk tolerance. I still think that we've got another rotation up, at least to our VWAP coming, hopefully, before we make a new low. Got about the same price point we were originally in at, a little bit higher. And I did save myself enough room to add a little bit to this if we push into the demand zone again. But either way, we're out at that low. We don't want to hold it beyond that, because then not only would that finish off that demand zone, but that would touch the low of B and create poor structure on the day. Which, ironically, that's probably where it would bounce back up, and we could potentially get out of a bad trade there. But I digress. We don't want to play too risky. Not today. Let's see, trying to identify the contract price we're looking to sell at. Around 1.7. 40 cents wouldn't be too bad. Oh, actually, there's quite a few orders sitting at 1.7. Looking at our level 2 information. If we end up bouncing off of that pivot line, I'll probably just bail from this position. All right, we're pushing up through it. Cool. Almost to our VWAP. A little bit of a stall out there. I thought about protecting this, but given the play action, I think we need to give it a little bit more time to breathe. And if I had protected it at the level I was looking at, we would have just gotten booted out there. So So that line I just added, that's line we don't want to see price fall back below. All right, breaking that VWAP. So this would be a spot that we could have sold at. I probably should have had at least one contract ready to go there. But I'm still eyeballing that 1.70 price because there's a few orders situated there. So that's kind of where I was more expecting it to fail. If it's going to fail, that is. We also potentially seem to be squeezing, so we could get the rotation back over VWAP now. But there was some really nice IV. We could have sold 30 cents worth of IV there. At least even on just one contract, but I'm very slow today. There's no reason to bail out yet. We do seem to be getting a crossover in our moving averages. We haven't quite hit the top of the channel or the overnight low. We've got a little bit of a resistance there too. I think we can get at least one contract at that 1.7 level. Oh, so close. Of course, since I'm only trying to sell one contract, I don't have priority fill. There we go. All right, we'll see how much more umfo this has. Oh, wow. All right, we're going to go ahead and protect that there because that's a clean break. All right, we're out. Cool. So we made two trades today. We got a full 40 cents on that play right there. And that's on 3 full contracts too. We got about 4 cents on our first play, which was also 3 contracts. So not a bad day. Not a bad day at all. And you guys got to see some pretty cool action back in the saddle. We didn't quite hit our profit goal for today. We're pretty close, but we didn't quite hit it. So unfortunately, 40 cents on 3 contracts is only $120. But as you can see now, Um, there was good reason as to why I sold where we did. I mean, we were breaking structure, right? So it's either going to run like a banshee or we're going to fail the break. I mean, maybe we'll get some consolidation and some further breaking after that. We could have just sold one contract and then held on to the last one until it, retested VWAP. But considering it's almost 11 a.m. and that's when we wrap up, it just made sense to take what we had and call it a day. So I hope you guys enjoyed the stream today. Hopefully, you weren't too annoyed by my coughing. Plan is to not do that. Plan is to continue to get our streams back up and running on a consistent basis. And hopefully, we'll be dropping some new educational videos this week as well that are a little bit shorter and more focused than our live trading videos. But again, some really good nuggets today. If you guys stuck around for the whole time, please like, subscribe, leave me a comment. I love reading the comments. You guys are awesome. And of course, as always, feel free to join our Discord and you can watch this stream live every time I do it. You can ask me questions live every time I'm doing it. So, there's some perks, some benefits there. And of course, as always, guys, it costs nothing to join our Discord. We're not here to take money from you. We're not professional traders. We're just folks like yourself trying to make this work for us so we can make our 9 to 5 our hobby and trading our job. But again, have a great day, everybody, and I will catch you on the flip side.